Hello, in this presentation we're going to take a look at a bank reconciliation and work a bank reconciliation using this Excel worksheet, and what we have on it includes the bank statement. So this item here represents the bank statement, so we're imagining that we are getting this from the bank either in the mail or electronically. We get the bank statement from the bank each month, and in this case it's the end of February that we are receiving the bank statement. General information on the bank statement, as you're most familiar with, would be the beginning balance as of the beginning of the month, which of course is the same balance as the end of the prior month. We have the additions that are increasing our balance, the deposits mainly, and the things that are decreasing, checks, draws, fees. That gives us the ending balance we have here, and then we recap these numbers. Here's the deposits and that add up to this 2110. Those are the dates of the deposit on this side. And then we have the checks over here that are decreasing our balance, and the other items being, in this case, a withdrawal that we went to the ATM and drew money out, and bank charges, and that adds up to the decreases here. We're also going to take a look at our books. So this is a T account for our books. It is covering some January 20th through February 28th. And what we're going to do, of course, is check our books to the books for the bank statement. Why? Because in theory, they should be the same. Our records should match the records on the bank statement. And they do for the most part. But we do know that there's going to be one difference at least, and that difference being due to timing differences. For example, this check here on January 23rd was written for $250. We know that when we write the check, we record it on our books when it's written, even though it has not yet cleared the bank. We know that it has to go into the mail, it has to be picked up by the recipient, who then takes it to the bank and deposit it, and then their bank has to talk to our bank, and then it actually goes out of the bank account. So we know that there's going to be a delay on the bank, especially for checks, and a smaller delay in terms of deposits. If we can account for that delay, then we can double check our books. That is the most important check there is other than the double entry accounting system, whether we're a large company or small company, whether we use electronic system to do our bookkeeping or we do it by hand. The bank reconciliation basically has to be done. It's one of the main checks that we want to do. And a lot of the systems will make it an easy process. That process will look much like this. We're going to take our books and we're going to match them up to the bank and just tick and tie everything off and see what the difference is. And once we find that, then if the general rule is going to be this: if there's something on the bank statement that we don't have on our books, it's most likely that our books are wrong and we will have to fix it. For example, the bank charges over here, we don't have those on our books because the bank charged us and took it out of our account without even, they just charged us and took it out. So obviously we don't have that on our books, but we need to correct it. So we are just going to correct that journal entry. I'm just going to make a journal entry for that at that time when we take a look at that and just fix that on our books because we need to make the adjustment. On the other hand, if it's on our books and it's not on the bank statement, then that's probably just a timing difference, meaning the check hasn't cleared or the deposit hasn't cleared. That's what we're going to put on the bank reconciliation. So at the end of the day, the bank reconciliation should, for the most part, just be timing differences. Any other difference that is not on our books that's on the bank statement, we will probably have to make an adjustment for. So first step on this then is we're just going to tick and tie this thing out and see what's on the bank statement compared to what we have. One more check just to check what we have here. Note that as of the end of the month, as of February 28th, we have 16,338, and of course the bank has 15,296. So I'm going to put that over here. I'm going to put the bank statement balance that's 15,296 over here in our reconciliation amount. And at the end of the day, we need the bank amount to add up and be the same as what our reconciled balance is going to be. So we'll have to make the adjustments and tie those two things out. Also want to note that our balance here of 16,338 is also represented on the trial balance here of the 16,338. So we're going to go back over here and we're going to tick and tie everything out that we have. Want to note one other thing before we start. We note that the beginning balance as of February 1st does not match the beginning balance here as of the end of January, which would be the same balance for the beginning of February on our books and the bank statement. That is because of these outstanding items. So we can see up here, up in before January 20th, before we had this transaction, then it did tie out. We see the beginning balances tying out. So this is where we're basically kind of starting from on the books, because we're including the non-outstanding the items that did not clear in the January account on our books as our part of our starting point. Those are uncleared so far, and we would expect those to clear in the following month. So let's see if that is the case. I'm just going to go through and tick and tie these out. I'm going to basically color them just so we can see them. Here's as of 2/1, we have this deposit. I'm going to highlight it. I'm going to make it green. I see it right there. Again, the dates aren't the same, but it's likely that those are the right deposits. We deposited it before it cleared the bank because we made the deposit. It cleared the bank at a later time. Here's the 500 deposit. On 2/15 it cleared. We wrote it on 2/7. So again, it's kind of a long time for it to, we put it in the bank or put it in our system. So it's kind of a long lag on the deposit, but it went through. That's good. So we have the 420 here. On 2/21 it went through. We made the deposit on 2/20, so that would be more reasonable of a time frame. And then we have 2/24 that this deposit went through, and here it is. We made it on 2/22. So there are the deposits, and if we look at the checks, then we see that we have the 250 cleared on 2/2. We wrote it on 1/23. Now we would assume a longer time frame here because the checks have to go through the mail, so it's not unusual to have a fairly long outstanding check in some cases, depending on who we are giving the check to. So here's the 1,200. It cleared on 2/3. We wrote it on 1/31, so it was outstanding as of the end of last month. Here's the 75 on 2/13. We wrote it on 2/10, and then here's the 250 on 2/15, and we wrote it on 2/12. So we've cleared all those out. Now that's everything that we have tick and tied that was outstanding from last month, and the things that we can clear off as of this month. We see that we have these 3 items still that are on our books that aren't on the bank statement. That means that those are probably timing differences, and that would make sense. We would say, okay, well these 2 checks haven't cleared yet. Well, we wrote them, we mailed them out. Maybe they just haven't gotten cashed and cleared the bank yet. How could we check that? Well, it's probably the case that we're doing this bank reconciliation sometime in March, because we would have had to receive this bank statement before we could start doing the reconciliation. So we could call the bank and say, hey, you know what, did these 2 checks clear as of March in some time frame? And then we can check and see if that is the case and be confident that we are okay, that those are outstanding items as of this date. Same being with the deposit. The deposit is a little bit more concerning. We deposited this right at the end of the month, however. Now, deposit should clear within maybe 3 days, probably less at this point in time. So if it was more than that time frame, you'd probably get a little worried. But if we are worried about it, once again, we just call the bank and say, hey, did this deposit sometime in March? And if it had, then we're okay with it. All we want to do is reconcile that we know what that difference is, because if we do know what that difference is, then we are confident that we've recorded everything correctly because it's been verified by the bank. Note that these 2 amounts are on the bank statement, but they are not on our books. And that means that we probably have an error, or we need to probably fix it. And so, for example, if we had a withdrawal, if this was our personal account, or if we, if it's our business account and we went to the ATM and just drew money out for some reason, then obviously that may not be something that we got around to recording. We may not have recorded that item, and clearly the bank did, and we're going to have to fix our books for the fact that we're going to have to decrease the cash in our account by the 80 that we took out that we didn't record. So we can just take it straight from the bank statement and say, okay, I'm going to record that. And the bank service charge, that's going to be something if we bought checks, or if they just charged us for late fees or something like that, non-sufficient fund type of fee, then they're just going to take it out of our account, clearly, and we didn't even know about it until we got the bank statement. So obviously we didn't record it on our books. So we're going to have to make that adjustment on our side. Notice that smaller companies may actually do a lot of their transactions from the bank statement, meaning they could do a lot of stuff with their ATM business checking card and get the bank statement and record a lot of the information at the time that they receive the bank statement based on the information on the bank statement. So on these two, we're gonna have to fix it. I'm not gonna put that on the bank reconciliation. I'm just gonna fix it at this point in time and say we need to make that adjustment. So if we looked at the journal entry then, if we're talking about the $80, we know that the cash has a debit balance. We know it has to go down by $80 because we spent $80 that we didn't record on our books. And so how do we make something go down? We do the opposite thing to it. This is a debit, therefore we're going to credit it. So I'm going to right click on this. I'm going to copy it. I'm going to go to P3, right click, and I'm going to paste it 1, 2, 3 because I don't want to paste just the values. I'm going to go into the credit side. I put it on the bottom too, by the way, because I do want to put it on the bottom if I can. And just traditionally the credits should go on the bottom. I'm going to make it a negative number to make our credits as negative numbers for the purposes of this worksheet. 80, when we hit enter, it'll put brackets around it because of the format of the worksheet. I'm going to put an 80 in the debit side as well, so I'm just going to put 80. We know we're going to debit something. Now the question is, what are we going to debit? And if we went to the ATM and just drew money out, and we didn't, have a receipt on it, then then we may not know exactly what we debited it for, but most likely if it's a business-related expense, we've spent it on something business-related. If we don't know what it is, then of course we might have to put it into the good old miscellaneous type of account. So we're going to go to miscellaneous in this case, right-click and copy that. Miscellaneous is an expense. All expenses have debit balances. And of course, we're going to make the debit balance go up by doing the same thing to it, which in this case is another debit. So I'm going to right-click. I'm going to paste that 1, 2, 3. And then we're going to record that and see what happens. So I'm going to go over here to V10, say equals, and I'm going to point to that $80. This 0 is going to go up to 80, like so, and it brings net income down. So we started with net income of 50,000 credit. That's income, not a loss. Credits beating the debits. We had an $80 debit. Income goes down to 59,920. Then we're going to go to cash over here in V5. Equals, going to point to the cash account. Cash goes down in this case because we're doing the opposite thing to it, to 16,258. We are now back in balance. So now we've taken care of this. So we can highlight that and say, okay, we took care of that. And then here we have this $2. So that's a bank service charge. Once again, they took money out of our account. So we have a debit balance in cash. We need to make it go down by $2. So how do we make something go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to go ahead and copy this. I'm going to skip a line for a journal entry, skip another line because that's going to be the debit. So I want to put the debit credit on the bottom. So I'm in P6, right-clicking, pasting it, 1, 2, 3. Then we're going to go over here in R6. I'm going to say negative to represent the credits with a negative, and 2 because that's the amount that they took out. And then we're going to debit something. So I am in Q5. So we're going to say 2 in Q5. And what will that debit go to? Again, it's going to have to be some kind of expense. Most people, I would think, and I would, in my books, have an account called bank service charge. Now, it's up to the bookkeeper to decide if they want that expense on there or not. Because if we don't have a lot of bank service charges, it might be a very small amount in there. So some people might put that into miscellaneous expense or some kind of grouped category because they would consider it to be immaterial. I like to know how much the bank is charging me, even if it's small. So I put it in the bank service charge here. So it's going to be an expense type account. So I'm going to say copy. We're going to go over here in P5 and paste it, right click, paste it 1, 2, 3, just the values only. Then we can record that over here. So I'm going to go into cell V11. I'm going to say equals and point to the bank service charges. That's going to make the bank charges go up in the debit direction. It's going to bring net income down by that $2. So now we were at 50. Now we're down to 49,918. Then I'm going to go to cash. Something's in cash. I'm going to double click on it. I don't want to delete that R3, which represents that $80. I'm going to say plus, and then I'm going to point to the cash here. Now, this is a credit. Excel sees it as a negative number. We see it as a credit. Therefore, it's going to bring down cash. It's going to put us back in balance when we hit enter. So there we have that. And and we can also represent that in our T account over here in our general ledger by putting in the I'm going to put it in as of 2/28. We have the $80 on the credit side, and we have on 2/28 the negative $2. So now that's represent our 16,256 is now what is represented on our trial balance over here, so we can see it in those two ways. So there's the activity in the cash account in relation to the other accounts that would be affected. Here's just the general ledger for the cash account, and of course those tie out at this time. Now we need to account for these three items here, these outstanding items. And that we're just going to put on the bank statement. There's no adjustment. We're not wrong in this case. We just need to make the adjustment and record it so we can see that we know exactly what the difference is. So we have outstanding checks. And the outstanding checks are going to be these two. So I'm just going to sum those up. I'm going to say equals sum of, I'm just going to highlight the 130 plus the 110. I'm going to say enter. And it's going to put the 240. So that's the 240, the 130 plus the 110. And it's a negative number in this case. That's not a credit. That's going to be just a decrease. So we're going to say that the bank had 15,296, but that's overstated by the fact that we wrote these two checks that haven't cleared the bank statement. So in order for us to tie out to our records, we're going to have to reconcile that outstanding item and bring that account down by those two checks written. But we also have an outstanding deposit. And yes, it's outstanding that we have a deposit, but outstanding in this context meaning that it has not yet cleared the bank. So, and that's for the 1,200. So I'm going to say that's 1,200 outstanding deposit. And so that, of course, is not being recorded by the bank. And that's money that we put in, and we went to the bank and put it into the bank, and it hasn't cleared yet. Therefore, the bank account's going to have to go up by that amount. So then we're going to have the cash balance. I'm just going to copy this, right-click, copy that. I'm going to paste it 1, 2, 3, and make one minor change here. It's not for the bank statements. This is per the books. So now we've reconciled. I'm going to go ahead and sum this up. So we've got the 15,296 minus the 240 plus the 1,002. Of course, all we're doing is summing that up. There is a subtraction in there, so it's the 15,296 minus 240 plus 1,200 gives us the 16,256. And that now agrees with our books here. And that, of course, also ties out to the reconciliation or our general ledger over here. So this is the bank reconciliation that we have here. Remember, the key rules here are that basically it comes down to if there's a number on the bank statement that's not on our books, it's most likely the fact that we're going to have to record it on our books. It is possible for the bank to make an error, but that's not really why we make the bank statement reconciliation. We make the bank reconciliation to correct things that we probably missed. and things like these $80 and the $2 down here. If, on the other hand, it's something on our books that's not on the bank statement, that is most likely the timing difference. So at the end of the day, the actual bank reconciliation is going to be the timing differences for the most part. That's going to be the change that we will have here. Anything else that happened is probably something that we should just fix. We should go in and make the adjustment in our books.